Hello, I'm Tim Beggins, president of Elk Trading Company. In this, the midweek natural gas report, natural gas prices are up. The spot October contract is currently trading at 307.90, up 7 cents or 2.33%. Why? Well, we've got some cold weather coming through the upper Midwest in the next week, and we've also got some pipeline maintenance, both in the Permian and Appalachia, as operators get ready for winter. So right now, again, we're trading about 308 on the daily chart. We pushed over that 13-day exponential moving average. We're heading toward the 48-day or 48 period, excuse me, exponential moving average, and that is at 3207. The RSI is pointing higher, so we've got continued momentum. This is the fifth day in the green, surprisingly so. And let's look at the hourly chart. We're well above the daily pivot at 298.10. We've gotten through first pivot resistance, which was at 309.30, and we've gotten secondary resistance at 317.70, and then well above that at 3289. So let's see if we can carry forward. But right now, the RSI is showing that we are slightly overbought at this moment. We'll look to see if things consolidate again here at first resistance at 309.30 and see if we can get a positive close and take a look if we can push toward 320. And here's the longer dated spreads here. This is the DEES 26 versus DEES 25. And as you can see, that spread is starting to compact because the front of the board here is now moving higher on this colder weather and pipeline maintenance. And as a result, we're seeing the narrowing of this spread. So our objective here on this spread right now is going to be around 44 cents or 43.6 cents if we get continued compression. As you can see here, the RSI is tilting lower, and we're now moving south here. This is about the fourth day on the downside. As you can see, when these moving averages get too wide, we get a mean reversion. So prices start to come back down toward that second moving average before we can move back out. And let's take a look at the winter strip. We're going to have a story about this tomorrow. And this is moving higher. We've since held really here. We had a dip just below this low here from November. This is the November all the way through March contracts average here. And this is currently trading around, let's see here, it is currently trading 85.80. Now this November all the way through March contracts, that's the average. The RSI is pointing higher. We'll look to see if we can get up to 393. That's our first resistance level. Well above that is 420.5. And here's the weather outlook for the 8 to 14 day. Well, we've got some below normal temperatures from New England back down through the mid-Atlantic states and near normal somehow like an egg here in Oklahoma and parts of Kansas. Kind of strange. But we are going to see some colder temperatures moving into the upper Midwest. And here it is. This is that cold air blob, if you will, and it is stretching all the way from really Baja California back through Chicago. And this is bringing much below normal temperatures to the upper Midwest and those parts of the Great Lakes cities over the next week. So that is also helping prices. Turning to the tropics, well, we've got one tropical system that we're keeping an eye on. This has got a 70% chance of development in the next 7 days. 30% in the next 48 hours. And this is an area we'll continue to watch here. As you can see, this is from NOAA. This is the Global Tropical Hazards Outlook. And as you can see now, it's not only the islands coming off of Africa here, but right now it's back in here into the Gulf. And this is around Bahamas, Cuba, Hispaniola, and of course, Mexico. And as you can see, that chance of development starts to increase as we get into September 17th through the 23rd. And really, again, there's more of an increase here in this Gulf area. So we're going to keep an eye on the tropics. Again, the peak of hurricane season in the Atlantic is September the 11th. And here's the satellite picture. As you can see right now, this is the area that we're concerned about over the next 48 hours, and then of course over the next week. We'll watch to see if this starts to develop and head toward the Dominican Republic, and as of course, Puerto Rico and some of the Windward Islands. We'll see what the path will take us. And here's why we're going to keep a careful eye on it, because the Saharan air layer or dust is continuing to come off of the continent and will probably inhibit development for a little while. But once the storm system gets past this area, it has a chance to get into some very warm temperatures and really accelerate its development. What else is happening? Well, we've got low nuclear outages at this season. Right now, we're currently below the 5-year average at 2.9 gigawatts. The average low for this period is 3.1. So we're slightly below on nuclear outages. What else is going on? Wind. How about ERCOT? Wind finally cracked the 40,000 megawatt level here for monthly capacity. Congratulations, wind. September is typically the lowest month of renewable output. So while we have pipeline maintenance, possible cooler temperatures in the upper Midwest, and low renewables, natural gas is stepping into the void. So what's going on with our stocks? These are the oil and gas E&P sector stocks with a market cap between $2 and $10 billion and a high short float over 10%. And our winner for this week is Murphy Oil and Gas up 6.62%. The laggards here, CNX only up 1.75%. But again, remember, these have a high short float. So if you get positive prices in the underlying commodities such as WTI and natural gas, these stocks have more room to run. So again, recapping today for the spot October contract, we're currently trading at 3092, up 8.3 cents or 2.76%. Let us know your thoughts in the comment section below. Please hit that like and subscribe button. Thanks for listening. We'll see you soon.